Most investors lose money because they try to outsmart the market. They pick individual stocks and they try to time the crashes. The result? They underperform the market average. The solution is a strategy pioneered by Jack Bogle, the founder of Vanguard. It's called the three fund portfolio. And no, it's not like the three fund portfolios you often see on YouTube. It's boring, it's simple, it's very diversified, and it statistically beats the vast majority of professional hedge fund managers and professional investors over the long run. This strategy is about buying the whole haystack instead of looking for the needle buried inside the haystack. We're going to look at a classic allocation today: 60% VTI for the US market, 20% VXUS for the international market, and 20% BND for stability, and that's the aggregate bond market. So let's break down the way that each of these funds works and contributes to the whole of the portfolio. Your core holding is 60% VTI. This is the Vanguard Total Stock Market ETF. When you buy this, you aren't just buying the S&P 500 companies. You're buying almost every investable company in the United States, and that's about 4,000 companies at present. You own Apple and Microsoft, but you also own the mid-sized and small cap companies, and those could be the giants of tomorrow. The expense ratio is practically zero on this fund at 0.03%, and this fund again represents your bet on the American economy. But of course, the US isn't the only game in town. Winners rotate. Sometimes the US leads, sometimes it lags. To capture growth everywhere, a lot of people put about 20% in VXUS. This is the Vanguard Total International Stock Market ETF. It gives you ownership of thousands of companies outside the US, giants like Toyota, Samsung, and Nestle. It hedges you against the dollar getting weaker and ensures you profit no matter which country happens to be booming at a time. Finally, the defensive aspect of the portfolio. Usually for people during wealth accumulation, that's about 20% in BND. This is the Vanguard Total Bond Market ETF. This fund holds thousands of bonds, both US Treasuries and high-quality corporate bonds. Why hold bonds? Well, because when the stock market crashes, bonds usually hold their value or even go up. They act as a shock absorber. They reduce your volatility so you don't panic sell when the market drops 20%. This is the Boglehead 3-fund portfolio. It requires zero research, zero stress, and about at most 5 minutes of work per year to rebalance, unless your employer offers auto rebalancing. It is the ultimate set it and forget it wealth building machine. So stop gambling and start investing. I'm Jeffrey. Let's keep the momentum going for your money. If you enjoyed this video, like and subscribe, and be sure to check out my channel for more good stuff.